What's up, people? Carlton Flowers here, your crypto pro.
Yay!
And we're going to jump in and do a very brief update on BTC. It's been nothing but boring side banding, and I've been really busy, but we need to talk because we have a possible event that's about to happen. So we're going to break this down really briefly, and I'll just show you what I see unrehearsed, just off the cuff. I looked at this chart this morning. I haven't looked at it since then. So let's just jump right in, get rid of my handsome face. And here we are on the 4-hour chart. So let's see here. First of all, I need to mute my phone so it can stop interrupting me. There we go. Now, the first thing that I see right off the bat that grabs my immediate attention, of course, is what could be an apparent breakdown of the lower end of this triangle, the triangle base. We've poked through it. So we had the first poke. I saw this morning, and then I saw these two little short green candles pop up. And then we went red again with a little bit more velocity on a micro scale. Not really that big of a move on the macro scale, but we did have an apparent crossover about to happen right here on the stochastic, where the blue line just went limp. It did not cross over the red slow line. And then on the MACD, we look a lot more bearish, where there's a definite crossover and a divergence of the lines and a downward trajectory where it is going away from the zero line. And now we are printing red bars on the histogram. Now let's go back up to this apparent break of this triangle base, and let's just kind of discuss this. First of all, I'm going to scrunch this down a little bit and raise this up so we can see some of this previous stuff that's going on. Okay, I'm not ready to call this yet. I'm really not, and I'm going to tell you why. It's because we're not really absolutely at a lower low yet. Now, one thing you will notice, I have another leg on the triangle. This lighter blue line is the previous one that everybody was going by. And of course, price went above it and below it, back to it as a resistance, and then it broke through it again and stayed well above it. So it's invalidated in my mind. And so now that we know it is invalidated, I left it on here for comparison's sake, but maybe I'll change the color to like a light gray just so I can keep it there to remember what we were being fooled by before. And so then I put this new line here that includes the peaks that we thought had broken out before. And even this line, it's violating this. This peak here did go outside of the upper boundary just a little bit. But the point that I wanted to make is this, why I'm not ready to call it yet. Here we see that the current price is matching this green candle wick right here back on June the 26th. So we're not below that. And then we also have another wick, which happened with the flash recovery back on June the 22nd when price dipped down to 28,673. Let's move up a little bit more. 28,791, about 28,791. You get the picture. Until we get rid of this one, I'm not calling it. Once we go below that, then I'm really going to think that we're going to fall. And then if we can take out this one here, then all right, it's game on. Crash City. We should be getting the correction to at least 27,000. And then if that fails, then 23. If that fails, then 20. But I'm not ready to prepare myself to start buying because we could still see a bounce out of here. If this is the true triangle bottom, we could still do this. But what if it's from this point? We could jump down here to the end of this, of what we thought was the triangle base, and it could also pop up. And see, this is what people don't tell you. Some of them want to just make their name as the one that called it and their prediction was right. And then they say these stupid things, and then they end up losing money, or they have to come back and explain why their prediction is wrong. And that's why you just should not predict. I would rather just talk about what the possibilities are, and to tell you how you can get fooled if you're listening to these people who claim to know what the market's going to do, as if they have a crystal ball, and they don't. And so you should have a strategy where you have a contingency plan. And so my plan is to wait until we get outside of this zone of insecurity is what I'll call it. The zone of insecurity. I like that. I'm going to make a box. Here's my box. This is the zone of insecurity. Until we get outside of this box right here, I am not going to make any decisions on buying or selling. Now, if we get below this box, this is probably going to be correction city. So at least at that point, I can move on with my strategy, which would be to start dollar cost averaging on the projects that I want, that are on the hit list. We're 27K at this point, buy a little bit. And then if we get blessed with a dip down to 23K, well, buy some more. And then if we get blessed with another dip to 20K, I'll buy even more. The biggest bag right there. I'll go all in here. Some people are saying that there's a possibility of crashing down to 14K or even 11. I'm not falling for that either, because as soon as we all start to think that and everybody gets the same thought in their mind, that's when the opposite happens, which is natural. Because the institutions, the market manipulators, the insiders, whomever it might be, they are going to take advantage of the situation. So the institutions will bet against the masses, or you'll have the whales or insider traders like the exchanges who get to see the short positions or the long positions, which to me, it should almost be illegal. Okay, these centralized exchanges like Bybit, why do people, I don't know. I don't understand why people take the chance on doing leverage trading with Bybit. You're sitting there placing your short trade and they're looking at it. It's like looking up the answer in the back of the book and cheating on the test. So if everybody is placing these short trades in massive amounts at 100x leverage, what do you think Bybit is going to do? All they got to do is punch a couple buttons and cause a price run and wreck every one of those shorts and make a ton of money, which we've seen this happen in the past. And so that is why you can't listen to people making these predictions. You should play it safe and talk about possibilities. And that's why I don't start my DCA game until I get to my targets. This is my plan. This is what I do if it goes down. If we bounce hard here, what I do is try to jump back into my positions before it sails off to the moon. Maybe by the time, if we recover to 32 and we're above this triangle, I might be convinced, or I might say, hey, if we go above the 200 EMA, I'm going to have to go ahead and get my positions and give up hope in the crash and do the best that I can, which is not financial advice. All right, let's erase this and let's just look real quick at the 1 day and see what it looks like overall, and then I'm going to be done. So on the 1 day, we do see that we have violated that bottom triangle with a candle. So that's significant, where it's a wick here, it's a wick here, it's a wick here, but this is a candle body. If this holds up, now if we snap back up and this is a wick here, I might be inclined to believe that we shoot up from that point. It's a possibility. This would increase the odds of a break this way if this red candle body turns into a wick. Right now, I'm looking at this weak stochastic that is bearish, where this fast line, the blue %K stochastic, just took a divergence from the red line, just like it did on the 4 hour. It's matching the 4 hour, just on a bigger scale. That's bearish. This tells me that we're still under downward pressure and we're not at the bottom of the oversold zone. We're right in the middle. We're at about the 10% line right there. And where could it go if it continues? To this volume node and to this volume node. And we are losing the gravitational attraction of the point of control price right here at the peak node, the POC of this visible range. If I slide this around, that changes a little bit. This is just the visible range that I'm looking at. That's why you can't say that what I'm saying is absolute, because it's not. Now, let me scrunch this down here. All right, the stochastic looks even worse on the 1 day. This just looks bad to me. Look at this nasty MACD. I'm losing my mind. We definitely have a rounding off here. Look at this. Momentum rounded off, going down, fast line below the slow line. And there's plenty of room to go for this why do I keep calling this the stochastic? It's been a long day, guys. Forgive me, please. There's plenty of room to go for the oscillators on the MACD and plenty of room for the histogram to print more red bars. If we drop it down, we do have room here where it could, say, support technically these two drops to these two large volume nodes. Now, one more time, let's erase this and scrunch down so we can see the other node. Here's the node at like under 20,000. There it is right there. And then when we go down, we see one at 15.8, and then we see one at 13. And I don't hear many people talking about that. I don't know why they're talking 14 and 11. Maybe they're looking at a little bit more price history, but even when I scrunch this into the visible range, I'm still seeing a peak node at 19. I'm seeing this 11, and I'm seeing this 15. So that's what I'm going by is the VPVR. I'm not listening to people. Well, that's what I see. What are your thoughts? What do you think? I'd love to hear it. Are you bearish or bullish? Are you thinking that there is a probability of a break this way? Or are you betting or holding until you confirm this red candle body that is already below the baseline? I'd love to hear it. This is Carlton. I'm out.